Hey, it's Cody A here. In this video, I will show you the exact year you will be able to retire by selling put options. I'll break this video down to 3 parts. Part 1, why a lot of people cannot become financially free by selling put options on individual stocks. Part 2, I will introduce the concept of fast, medium, and slow money and why you need all 3 to become financially free. And part 3, this is the most amazing part, where I show you my say yeah to fire calculator, where you can reverse engineer the exact year where you will replace your full-time income with our said and done stock option strategy. Part 1, why you cannot retire on selling put options on individual stocks. I'm using Shopify as an example and I will share my screen. So Shopify for the last 5 years has been increasing from $13 all the way through pandemic to December 2021 to as high as $170, so 10x and more. However, within 1 year, it dropped as low as $30 and basically took a haircut of 80% and now recovered about 30%. So all in all, from the all-time high to the current price is still $100 off. It is a 66% drop. So everyone was making great money selling put options for these past few years, but for the past year, not only they weren't able to sell any put, they're also holding bags of stock and they cannot turn around and sell any covered calls to make premium, which is the cash flow they were looking for. And if you're holding Shopify, unfortunately, you might be still holding the bag with 60% unrealized losses. And that is why if you sell put options on individual stocks, you're at the mercy of the company and you're at the mercy of the stock performance and it's not consistent as you were thought it would be. If you're selling put option and you do not want your underlying stock to drop 80% like Shopify, make sure you hit that like button for some good luck. In part 2, I will be explaining the fast, medium, and slow money. The purpose of the fast money is to sustain your lifestyle and pay for the monthly expense. These fast money can include your active business income, your full-time income like T4 in Canada or W2 in US, or you can generate the cash flow from a said and done stock option investing strategy and check out the video here. The idea is that you want to increase the amount of your fast money so that you can pay off all your expense and still have a lot of money left over for you to invest so that you can build up long-term wealth. Why use our said and done investing strategy? Remember that example of Shopify from part 1? Our said and done strategy is only relying on S&P 500. It has less volatility, so you will generate a more consistent cash flow. And now that you generate your consistent fast money, what do you do in the medium term money? Then this is where you can make money within weeks, within months, or maybe even years. This is where you can use the proceeds from your fast money to sell put options on individual stocks so that you can own the stocks you want to own at a cheaper price and hold on for the long term. And I know a lot of you guys who are watching are also real estate investors. The medium money is also equivalent to buying an undervalued asset, put in some renovation and push the value up and get a higher rent, or the natural turnover of tenant where you can increase your rent. Slow money is where you increase your total net worth. Now that you have money from your fast money to cover your daily lifestyle expense and you're doing the medium-sized money to buy the stocks or buy the asset you want to buy at a cheaper price, now you have the money to continue to buy more assets. And these assets you're planning to hold for the long term. For example, good quality blue chip stocks or the real estate you're gonna buy and hold for 10, 20, or 30 years, you might be passing down to your children. And slow money is where you build up your nest egg and your generational wealth so you do not have to worry about anything. Now we're getting into part 3. Like I promised, I'll show you guys the exact year where you can replace your full-time income by using our say yeah to fire calculator. So this is a very detailed calculator and I'll walk you guys through it. We only input the number in yellow cells. The target monthly income is the money you're making for your full-time income or for your active business. Now you're gonna come up with a scenario number 1 for very general people, like a lot of my students who first joined. let's say they make about $5,000 per month. Don't worry about the 10 years because our calculator is only up to 10 years. Really, we try to retire everyone within 10 years. So 10 years, leave it here. An existing cash flow per month, that's how much you're making from other source before you join. Let's just say you own one or two, a few real estate property. Let's say it's about $1,000 from all that. Okay, $1,000. So you will see that here's the cash flow needed to provide to hit the goals 4,000. And in terms of your starting capital, a lot of my students start with 10,000 to 50,000. So that just put in 50,000, 50,000. And then the monthly rate of return, again, like I said, is 1.5% to 3%. Let's just be on the safer side when you're starting, and that's 1.5% per month. And don't underestimate the 1.5% per month because that is still an annualized return of 18%. And based on the rule of 72, you can double your money every 4 years. Okay, so let's get back into it, 1.5%. And monthly contribution is where, let's say you have some proceeds, right? You make $5,000, you still, after you pay all the expenses, or before you pay all the expenses, you crop out a chunk of money to put aside so you can invest. And that's just, for example, put in $1,000 in the scenario, $1,000. So boom, from this Excel spreadsheet, if I scroll down, you'll see the monthly cash flow of every month, right? All the way from year 1, year 2, year 3, year 4, all the way up. And then you'll see that your cash flow continue to go up because your portfolio sizing continue to go up and you're reinvesting and all that. So on this chart, I will show you the exact year you're gonna replace your full-time income. Remember early on, I put in 5,000. So this is green line of target. And this is where the monthly cash flow start, right? And then by year 8, around year 8, this is where you exceed your full-time income. And this is when you will become financially free. If you want to download this calculator and reverse engineer exactly when you will become financially free, don't forget to click the link in the description to get this calculator. And for my students who has a few months of experience to start scaling up their portfolio, or for my students who have the bigger account just to start with, I'll run scenario number 2 and maybe you can relate. So instead of a monthly income of 5,000 they're trying to replace the $8,000 monthly income, existing cash flow per month because they make $3,000 more. I say instead of 1,000 that they can already making from cash flow, they're making 3,000, right? Starting capital, instead of 50,000, they start from 100,000, right? And because they learn the strategy and a little bit more aggressive, but still conservative in a way, instead of making 1.5%, they're making 2% per month. And then the monthly contribution, because they do make more income, instead of just putting $1,000 they can put in every month, I put in $3,000. So let's see. So again, you will see from year 1 to year 10, again, when we come to this chart again, you will see that around year 4, right? Year 4.2, this is when they will be able to replace their $8,000 full-time income by using our said and done strategy. And if you enjoyed this video, you want to watch this other video of how I retired at age of 29 by selling put options, and I'll see you in the next video. Say yay.